What makes Barwick different than like Chase and Wells Fargo and like the bigger banks?
Sure. Yeah, I should probably tell you a little bit about the bank, I guess.
Yeah, go for it.
The group I'm with, they purchased this bank back in 2019. It was a small bank in Barwick, Georgia, kind of south central Georgia. It was a family owned bank, an ag bank, really. And we've kept that name. Some of those family members are still on our board, but we're a privately held local bank in South Georgia and Northeast Florida.
What's up, everybody? Welcome back to another episode of Get After It. I'm your host, Johnny Velarde, and today I'm joined with a very special guest, Mr. John Matulia. He's our banker here in St. Augustine, Florida, and a friend as well. We golfed together. We went to the Players last week. We always get lunch, and I wanted to have him on. He specializes in commercial banking, and that's a field that I knew nothing about until 3-4 years ago. So excited to have you on. And
thanks for having me. Excited to be here.
Yeah, excited to have you on and learn about your journey. So why don't you tell us a little bit about your background? What did you do before you got into banking?
I'll try to keep it short and sweet, but I definitely did not graduate high school and go to college think I was going to be a commercial banker. I grew up in a baseball home. My dad was a baseball coach. And so I actually ended up signing with the Florida Gators to go play baseball there. Ended up getting drafted by the Rays, or the Devil Rays at the time. I ended up signing a pro contract instead of going to college. Spent 6 to 7 years or seasons with them. Spent time in Montgomery, Alabama was my AA team, and then AAA Durham. So we ended up moving to Montgomery, my wife and I think in, 2008. Once I was done playing, Auburn University is close by, so I went to Auburn. I was a 27-year-old college freshman, so that was kind of interesting. Fun time, but studied business and economics at Auburn. During that time, I got my real estate license and coached a little bit of travel balls, worked on a guy's farm there. So did a couple different things, but really kind of fell in love with real estate while I was in school. Started selling real estate while I was still in college. We primarily focused on large timber tracts. So he was a large land broker in Alabama. That was a good time period for me. From there, I kind of transitioned into banking based upon that real estate career. A few ag banks kind of reached out to me and started my journey in financing with large land tracts.
Nice.
So
how was I kind of had a similar when I went to Pepperdine, because I went to the military first and I got out. I was 23 when I got out.
Yeah.
So I was a freshman at like 23, 24. So what did you were 27? That's when you took your first
yeah.
How was that being 11 years older?
I'm very appreciative of that route, because I think if I'd went to school right out of high school, I probably would not have taken it as serious.
Mm-hmm.
And so when I started as a 27-year-old freshman, I treated it like a job. I showed up early every day, did those different things. And so I got a lot out of my undergraduate degree, which I think a lot of people, I hear them say, hey, it's just a piece of paper, but I got way more out of it than what I think most people do for undergrad.
Yeah. I would agree. Yeah, because college for a lot of people is like, partying and, whatever. It's cool to party. But yeah, when I was at Pepperdine, same thing, go to the gym early, get to school. I mean, I sucked at math. So it's crazy because like these younger college students, they would get A's and B's on all the tests. And like, I thought that they weren't studying as hard as me, because they were always, they always left as soon as the bell rang. They never stayed for office hours, and they just happened to, I don't know, but I could never get it down. Like, but the calculus and the stats, like that shit was hard. I would do office hours for multiple per week and still get like C's, barely pass. But I think when the professors know that you care and you're trying, like, sure, they're not going to fail you as long as you're putting in the effort. Sure.
I always joke that they literally hand you the cheat sheet before the class starts. It's the syllabus, and it tells you what to read and what to do prior to class, and nobody does that. So
yeah, that's true. Yeah. Okay, cool. Yeah, I didn't know you were a real estate. Was it residential or?
No, I didn't do any. Why I say that? The only residential stuff I did was on larger pieces of property. We did commercial as well, primarily vacant land, but the majority of what I sold was kind of larger timber tracts. So it was a fun job. It's just how cyclical it could be, and so the income stream was variable. So it was nice to move into a kind of banking career.
How was touch on the baseball stuff briefly. Like,
Sure.
how'd you support that? Like money wise, like was it difficult?
Yeah, I mean, when you get drafted out of high school, they give you a signing bonus, so that was one of the ways. And then, in the off season, I'd do baseball lessons, which I enjoyed. I mean, that season of life was great. I would say that you kind of fall out of love with the game in a lot of ways, just because it's so stressful, so demanding. It becomes a job. I mean, it just is. I had more fun, I'd say, playing high school summer ball with my buddies than pro ball, but I'm very grateful. It was awesome. I mean, taught me how to work hard, taught me how to be a good teammate, which has helped me kind of in my career now, where you have multiple different types of employees with personalities, ages, all those types of things, where I'm sure, like in the Marine Corps, you learn to get along with different type of people. So it was good.
The Marines had every color and every type and every religion. Yeah. So you really, and everyone's the same. Like if you're the same rank, you get paid the same penny amount that I do. So it's like it everyone's treated equally, and everyone eats shit together in the Marine Corps. Yeah.
And for sure, like hard work and being competitive, I mean, it translates really well into the workforce.
Yeah.
So
That's cool. What are some transitioning a little? What are some big mistakes as a banker now that you see people making when it comes to handling their finances?
yeah, so really what I do, I mean, on the commercial lending side, I'm not a financial advisor. I'm not looking in depth at those types of things, but I wrote down concentrations. What I mean by that is oftentimes people put maybe too much in the real estate bucket and they don't have any liquidity. So, hey, I've got a portfolio of all these properties, but they don't have any liquidity. So I'd say concentration risk is what I would say. Liquidity is king, so it's good to keep that. One of the biggest, I wouldn't say mistakes, but just not well known to people. They come to me, hey, I got 10 million in real estate. Can I get a big line of credit, or can I get a cash out? And you have to be able to support the debt. So just because you own real estate and it appreciates doesn't mean you can always access that capital. And then it's hard to sell sometimes. I mean, if the market's bad, it's hard to sell. So that would be one.
Yeah, that's good advice. Yeah. Yeah, you can be paper wealthy, but that doesn't mean anything unless someone wires you the funds and that could take 90 days,
Right.
oftentimes longer, especially in a tricky market like.
So a balanced portfolio or a balanced net worth statement is what I would say, kind of good concentrations of everything.
Yeah. Yeah, I'm starting to realize that now too. Like it's just nice, and it's just nice being able to go to bed with money in the bank, like
Right.
just extra money to pay, whether you have real estate or whether you rent. Like it's just nice to have that money there in case you get sick or you get fired or whatever your big company closes. Yeah, so it's good to have the liquidity for sure. What makes Barwick different than like Chase and Wells Fargo and like the bigger banks?
Sure. Yeah, I should probably tell you a little bit about the bank, I guess.
Yeah, go for it.
The group I'm with, they purchased this bank back in 2019. It was a small bank in Barwick, Georgia, kind of south central Georgia. It was a family owned bank, an ag bank, really. And we've kept that name. Some of those family members are still on our board, but we're a privately held local bank in South Georgia and Northeast Florida. What makes us different kind of than some of the bigger banks, and we all have our space in the banking world. Some big banks are needed for some things and small banks for others. But I think really it's you walk in, you shake my hand, you know me, you know my retail team, you know our branch manager. If we say we're going to do something, we're going to do it. We know our markets, so we are local. Everyone that works in my office has been around here for a while, kind of knows the real estate, knows the people, knows the businesses. And you can get us on our cell phone, so that's some of those things are a little bit different than other places. And decision making, I mean, even like, credit calls or loan committee, the decision makers are in town and they know the real estate. Whereas I know some of these bigger banks, they send their deals through Charlotte and those guys have never been to St. Augustine, so they don't really know the real estate or the people.
Yeah. Yeah. And I can attest to that too, because like we've done deals together and it's super, you still got to do like your paperwork and everything, but it's just seamless. Like you send it in and I use you guys for a lot of stuff. And like for our California company, we still use Chase, like
Sure.
just because it's a pain in the ass to switch. But yeah, there's definitely pros and cons. Like Chase or Amex, like you get all the credit cards and the rewards and like the things like that. But yeah, if you want to get a loan on like a local building in town, it's going to be way easier to go through a bank like Barwick. And
It's a personal touch.
yeah, yeah, so that's great. Um, Then your new bank is awesome. That's the nicest bank I've ever walked into.
That's
Yeah.
I wrote down another thing too about being agile. That's another thing is I'm trying to think of a good scenario. Maybe it's like a phase one kind of we need to order one last minute or whatever it may be. We're a little bit more agile to where we can change things on the fly, whereas some other big banks, it's got to run all the way back through, run up the flagpole.
Yeah, it could take weeks or months.
Correct.
And thousands of pages of
Correct.
paperwork. Yeah, for sure. And you can lose deals because of that.
Sure.
So yeah. What are the main things you look for when potential clients come to you asking for loans? I know you kind of touched on it, like stuff like that.
I'll give you like the textbook, what every banker's taught when they start doing credit underwriting is the 5 C's of credit. And then I'll kind of elaborate on what those are, but it's capacity, which that's one of the C's, which just means your ability to repay essentially. Can you service the debt? You think about DTI or debt service coverage. Those are kind of the capacity. Can you repay the debt? Capital, which is just liquidity. Can you put enough money into the deal to make the
skin in the game?
Right.
Yeah.
Think about LTV or whatever that is. Do you have that? Collateral, which is a big deal. We're not collateral lenders, meaning our plan is not to take the collateral back. That's not what we want to do. It protects the bank in those bad situations. Conditions, which are just market conditions, what's going on in the economy with multifamily, what's going on with single family, what's going on with whatever it may be. We look at those market conditions. And then character, which is just, that's pretty plain and simple.
Yeah.
Do we trust this person? Are they going to repay us? Are there issues that we've seen with them repaying other people? Whatever it may be. That's kind of the gist of it. I mean, that's kind of, again, a textbook answer, but the ratios are pretty easy to look at, if that makes sense. If you give me a piece of paper and you give me ratios, that's not hard, but kind of the broader picture of it.
Yeah. Yeah. And especially being local, like, what rents are going for, what land's worth, like, all the agents in town that are. Yeah. So
one of the coolest things about what I do compared to like home mortgage lending is that, I'm really a business partner. We don't sell our commercial loans. We keep them on the books. We service them. And so when y'all are looking at a deal, me and you are going in and looking at that deal. If it doesn't make sense, you shouldn't do it, right? If it does make sense, we're going to come alongside you and partner.
Yeah. Yeah. And that's a good point to bring up, because I think years ago, before I had like banking relationships, I just thought the banks were like, oh, they just, charge interest and make money. But like, yeah, that's true. But how are you going to go buy a $3 million building? Like, you don't have $3 million cash. Like, you need to put 20 or 30% down, and then the bank covers the rest. Obviously, they need to make interest, because how are they going to be in business? But yeah, it's interesting to, as you grow older and wiser, you start to like see different things and learn different things. So yeah, that's cool. What types of lending products can people get with Barwick?
Yeah, it's a good question. I mean, we don't have like a specific product suite, which is kind of nice. Meaning, if the deal makes sense, we can lend on it. So obviously your normal owner-occupied real estate, non-owner-occupied real estate. But I mean, I've done offshore boats, I've done helicopters, jets.
Helicopters.
Yeah.
Damn.
So I mean, we can look at doing anything. We do have HELOC products as well, and then we have a mortgage division. So we do a little bit of everything. So it's kind of one of those things. You walk in the door and we can have a conversation, and we don't want to waste your time. So if it doesn't make sense for us to do it, then we're going to say, hey, you may want to go check out these other places.
Yeah, that's cool. What was to get a loan on a jet? How does that work? How much down you have to put?
Man, that was like a very elaborate process. I never realized like there's a whole group of tax attorneys and accountants that deal with these high net worth people that buy jets. Cause it's, flight logs. And I was on these calls. I'm like, I have no idea what these people are talking about, but and a lot of times you're getting life insurance policy on your client in that scenario too. So it's pretty neat.
Intricate. Yeah, for sure. Let's see here. How do most successful clients position themselves differently than like most average people that are trying to walk into a bank and get like the people that?
Yeah, that's a tough question. I would say that most of my really good clients understand their financials well. So they're not only good at doing what makes them money, but they're also good at understanding their financial position and then how to present that to the banker. The easier you present to me, the quicker I can move and do stuff. So they, again, first understand how they make money, but two, they understand the financials. And some of that may just be They keep over a period of time, they learn how to keep cleaner financials, whether that be quarterly, monthly, etc. I think that's probably the biggest thing. And then the other thing, this is maybe like a area where you can make a mistake, is they stick to what they're good at. I've seen a lot of clients that are on paper doing really well, and then they start jumping around to different things, trying to make, do something different. It messes their primary business up.
That's good advice. Yeah. Yeah. Last year, my brother and I, we were really interested in like buying like a boutique hotel. And we've kind of, like what you just said, just stay in your lane. Like there was some deals we were looking at, and who knows, maybe in the future, but right now we're really focused on just the parking and the valet and the shuttles, which that's like that's our core business that drives everything else. Yeah. So like all the real estate that we buy comes from that. And the real estate is mostly like a tax play and wealth building play. But yeah, I think that's really good advice.
This goes back to one of your previous questions, but also, our primary repayment source typically with commercial lending is whatever the asset is that you're buying. But you need to keep in mind kind of your personal debts and really your personal financial statement, because we look at a global relationship. So the asset itself may be great in repaying, but if personally you've got a bunch of consumer debt and issues going on, that can affect what we do.
Yeah, so stay away from like the super expensive cars and if you're trying to keep a clean, if you're trying to get lending and make it easier, don't have so many car payments and like the expensive house payments. And
unless you're the guy with the jet, then you can do that.
Yeah, unless you can afford it. Yeah. And then I think the first thing you talked about having like clean books. Yeah, that's, you first introduced us to Tyler and Clicky and Tebow and all those guys. Yeah. Yeah. I mean, we had a CPA before, but the importance of keeping your balance sheet up to date, your P&Ls, like, and then that needs to be done like monthly, because if it goes too long, it's just a mess. Because when you want to go get a loan, get a HELOC, whatever, the bank's gonna ask for that stuff, and it's a lot easier.
I can typically tell within the first 30 minutes of meeting someone and them getting me financials how the deal's gonna go. People that know their financials can get everything to me. I know it's going to go pretty good. Inversely, if it's tough to get me financials, it's going to be pretty tough to get it done.
So keep your books straight. Yeah. Next question. How valuable is building relationships with people in the banking industry?
I mean, it's everything. It's literally what makes Barwick work. We hire people that are out in the market, getting to know local businesses, local people. It's just fun to do business with your friends. I mean, at the end of the day, we got to see each other all the time. It's great to have a personal relationship with a lot of people. So I'd say that relationships are everything for us. We're not a transactional bank. And so even in my career, my journey from high school, baseball, that stuff to here, it's been all relationships that have gotten me where I'm at. So I'm sure you would agree with that.
For sure. Yeah. Yeah. And in the last year, 6 months to a year, I've really picked up on the value of that, because like I'm 30, and prior to like a year ago, I didn't have the podcast. I wasn't going out to lunch with everyone. I wasn't golfing with people, just my friends and my little circle, which is fine. But if you want to build trust in the community and have those different opportunities, like if no one knows you or trusts you, you're not going to get it.
And like, I don't want to sell you something. I mean, I think a lot of times we'll go to lunch. We don't even talk about business. We talk about our kids and school and how bad our golf game is, whatever it may be. You know what I mean? We're just getting to know each other, and then it makes the business stuff a whole lot easier.
Yeah, for sure. Yeah, that's good advice. Okay. Let's say we're doing a deal. What are some terms that clients can negotiate, and then what's like non-negotiable? Like
I saw that question before I came, and this sounds like a silly answer, but we don't really have to barter or negotiate a ton. I think that we offer very favorable terms, and the ease of the process with us, people don't even really want to shop it. Obviously, interest rate would be the first thing that comes to mind that you can negotiate. Origination fees, those types of things, but title fees and all kind of miscellaneous appraisal fees, environmentals, those kind of things, they're just in the deal. It's just part of it.
What about like I'm just spitballing.
Sure.
Like prepayment penalty.
Yeah, absolutely.
Like things
Absolutely.
like when you really go into it, like a more savvy investor. I'm just trying to think of.
So typically I get you a term sheet. The term sheet kind of spells out the deal, spells out the loan terms, spells out if there's prepayment penalties, what, LTVs and all that stuff. And we can have the conversation from there. A lot of commercial lending, you have balloons. And so I talk about what a renewal looks like, or I talk about maybe how the loan may reprice over another 5 years or whatever it may be. So those kind of things all come out in the first couple conversations. But again, I would say that I feel like it's not really like a hard negotiation, if that makes sense.
Yeah.
And again, it's different than a mortgage lender. I don't get paid off of every deal, and we don't have to put every deal on the books. And so we're looking for a good relationship because we're going to keep your loan. I'm going to be in touch with you. And, so there's times where we let deals walk because of pricing.
Yeah, that's cool. Yeah, like when you buy a single family house, like oftentimes if you do it through, I'm trying to think of who I did it through. I bought my D.R. Horton house, and like 60 days later, I get a letter in the mail. It's like, here, I'm your new provider, which, I get it. That's what it is. But it's just annoying because now you don't know who you're dealing with. And yeah. I was going to ask something. So like, and I'm just curious, like, let's say you buy something for $1 million, right? 20% down, and the rate is whatever the market rate is, 6.5%. If you go like 40% down, is it typical for the rate to be less, or is that irrelevant? Or
it can, yeah. I mean, it can.
Okay.
Really, again, for us, unlike I think home mortgage lending, our customers aren't as rate sensitive because they're buying assets that are cash flowing, right? So, yeah, there's a margin that you get off of that, but
yeah, that's a good point. Yeah,
if you put more cash down, you're just going to be making more income in the long run. But if you want to put more down, I'll reduce the rate if you want. If that's what you want.
No, I'm just. It's because I did. Thank God I didn't buy it because it was not ready for it right now. But like we went to Toll Brothers, and with like single family home, like you can put whatever 3, 5, 10% down depending on, and you can buy down the rate, which that makes a huge fucking difference over 30 years. Like buying the rate down half a point. Like you said, it's not cash flowing. You're living there. Yeah, you get value out of it, but it's like it's different.
So like banks are their balance sheet. And so our cost of funds are basically our deposits, our CDs, our funding sources. And so if I have a bunch of 12-month CDs on the books from 6 months ago, my rate pricing can't vary a ton, so that's why we hear about, Fed met yesterday and we see rate changes and all that kind of stuff. Ours doesn't change daily like a mortgage rate. So it's more based upon what our loan portfolio, deposit portfolio looks like. That's where there's not as much variation in rate.
How much does a bank, and I don't know if you know this, but how much does a bank have to have like in their bank account to lend? Like, is it for every dollar you can lend $10 or $5 or?
There's liquidity ratio requirements. You can look up all the bank regs, but effectively like a 10% margin. So
got it. Okay. All right.
90% of what
we're
lending out.
Cool. What do you think about rates? Or one, do you think they're going to go up or down or stay the same? And two, does it affect how you guys do business?
I have no idea. Kind of that 5-year, 10-year money is not going down, and that's what we price a lot of our stuff off of. And then with war conversations and all this inflation conversation, I have no idea. I really don't. So to be determined. We're definitely, I'm not going to say cautious, but we're definitely keeping an eye on the economy and trying to figure out what it's going to do over the next couple of years for sure.
Do you think banks are going to tighten? Like they're seeing what's happening and they're like, tightening the belt a little bit? Or
I think we've seen a tightening on the construction side of commercial lending, like these larger multifamily deals that take a couple of years to build.
Yeah,
and those costs have gone up tremendously to where the deals don't cash flow anymore. So I think you are seeing some banks be a little bit more cautious about commercial construction lending.
Yeah. What's Barwick excited to lend on right now? And what are you guys staying away from?
I would say we always love owner-occupied office space. So if you're a local dentist that's been leasing a place, you want to buy an office, we'd love to do that. I mean, really any owner-occupied office is what we're excited about. But, we've done a little bit of everything. I've done some Airbnbs. I've done some 1 to 4 family rentals. I've done boats, etc. So I'm not really deal specific. We've done RV parks. We've done, storage places, flex space. So really it's very deal specific. We are a little bit hesitant on multifamily, larger multifamily, and it's based upon our concentration. We already have enough on the books. And then we've stayed away from spec homes recently. I know people know that homes aren't moving like they used to. And 4 years ago, everyone was trying to find dirt and build specs because people were moving to Florida, but it's slowed down quite a bit. So we're slowed down on spec home.
Yeah. We just had Jacob Klein on, last week. Yeah. And yeah, the Florida market is tricky. My brother, he's got a house on Ashby Landing. It's kind of by Luke's yard where the dumpsters are. And he's having trouble filling that. And that's like a perfect location.
Right.
Like it's like 10 minutes from everything. So,
but back to kind of who you bank, and there's some clients that can weather the storm. And so we can still lend in maybe some areas that are a little bit riskier or not as attractive. So it just depends on every deal is so specific. I should mention too, we do SBA loans, we do 504 loans, we do 7A loans. So we have some familiarity with that. And so if there's, small businesses that are maybe tougher to bank, we can always look at going that route.
For those that don't know what a HELOC is, what's a HELOC?
So it's a home equity line of credit. Generally, it's usually a second mortgage. So you have your primary first mortgage. Our product specifically, it's a 20-year deal. First 10 years is interest only, so it's a line of credit. You basically think of it like a credit card with a lower interest rate, priced at prime. So you can grab the equity in your house. You can use it however you kind of need to. At the end of year 10, it does convert to a regular 10-year P&I loan. But yeah, I mean, it's a good way. Like if you want to build a pool and you have a ton of equity and you can repay it, that's a good way to build a pool or whatever it may be, put on a roof, whatever.
Yeah. Or have for emergencies. Yeah. I have a HELOC on mine, and then I don't know if it's technically a HELOC on the lot that we have, but I know we did that deal. So that was cool. Yeah.
Yeah. I just got done with my MBA at LSU, and I used my HELOC to pay for some of that school as well. So you can use it for different things.
Nice. Yeah. Yeah. And the rate, it goes, it's not like a credit card where it's 28%. Right. It's like whatever the market rate is.
It's tied to Wall Street Journal Prime. So when Prime moves, that rate does move, which 4 years ago, that was not great because it went way up, but now it's trending the other direction.
Yeah, that's cool. If you could tell a young business owner that's looking to grow something big, what's the best piece of advice you'd give to them when it comes to money?
I think it goes back to what I said before. You really need to know your balance sheet, your cash flow statement, your P&L, all the things that we learn about in school. And I found a lot of small local business owners, they didn't go to school because they were good at making money, which is awesome. But some of those simple, financial tools, they really need to know them. I have a lot of conversations like, hey, I'm going to do $3 million this year. I'm going to do $4 million. And they're talking about a revenue number, whereas the net income number at the very bottom is what the banker can use. So I'm concerned with the net number, unless you're trying to grow a business and sell it, and then you're worried about EBITDA and all that. But from a banking standpoint, it's that bottom number. And it's not always better to grow a business. Sometimes it's better to scale the business, the other direction.
Yeah. Yeah. That's good advice. Yeah. Yeah. Sometimes it's really good when you're small because you don't have a lot of overhead and it's just you, and you probably work a lot and whatever, but you also keep a lot. It's being in the middle where it's tricky because now you're starting to grow and you're bringing on like extra employees and office space and utilities and insurance and all this stuff. So it's being stuck in the middle but once you can get out of the middle, right? Yeah.
Surround yourself with a good team. So if you're not the one, if you don't have an in-house bookkeeper, you're not doing that, then find someone that can do that for you and can look at quarterly statements with you so you know what direction you're going. Again, it would blow your mind how many successful business owners don't even look at their financials. They wait until they start filing taxes.
Yeah, it's crazy. Taxes, that's the biggest expense that you'll ever have for any person or business is tax. So finding out how to legally avoid paying tax, because I'd rather spend my money than have the government spend it. So as long as you're doing it legally, but that's something you got to do every month, not at the end of the year because it's already occurred.
And you need to have a strategy. Like, what are your goals? If you're buying 4 new trucks in December just to mitigate some tax liability, does that help you grow your business? I mean, if you need to borrow some money the following year, and do those 4 new trucks help you do that? Maybe not. So that's where having a good CPA, having a good banker can kind of help form a strategy for what you want to do the next couple of years.
Yeah, that's great. So if people want to reach out to Barwick, what's the best way to get in touch with you?
Find us on our website. Just go to barwickbank.com. You can find us there. Call our branch.
And you guys lend in which states?
Florida and Georgia.
Florida and Georgia.
We can potentially go outside of there, but we are a Georgia and Florida bank.
Okay, cool.
And I'm sure this will be tagged or linked to my LinkedIn. Feel free to reach out to me. Hopefully my email address will be in there as well, and just reach out.
For sure. Yeah. Well, thanks for coming on.
Absolutely.
Yeah, we got to golf soon. And hope you guys got some value out of this. Make sure to keep your books straight. Build a nice relationship with your local banker. And yeah, good luck. Get after it. We'll see you on the next one. Take care. Thanks, John.
Yeah, thank you.
That was cool.